Welcome to today's IVG Market Blast. I'm Brad Alexander, and today we will take a look at Forex trading on silver, the Russell 2000, the Dow Jones Industrial Average, the NASDAQ, WTI, and Brent Crude oil. Just a reminder that these videos are only an observation of current market conditions, and these are not to be considered trading advice. And don't forget to like, subscribe, and keep up to date. We have to start with Brent Crude today as prices spiked again based on the blockage of the Strait of Hormuz and the destruction and damage to oil-producing facilities all over the Middle East. It's hard to imagine a technical trade here, but if we see price action at the lower trend line and the stochastic oscillator oversold and turning up. Apparently some tankers are buying passage through the strait, but more attacks could drive prices higher. Good news, on the contrary, could see Brent falling. For you Fibonacci fans, the retracement from the last drop in price gives us clear levels of support at the 38.2%, 50%, and 61.8% levels. Price action on WTI crude oil looks completely different, with the 38.2% Fibonacci level serving as the only level of support. In fact, price action on WTI is forming a descending triangle, and we might see more downward pressure based on this week's inventory report that had supply much higher than expected. Last time on the NASDAQ, we pointed out that price action was at the upper trend line and the stochastic oscillator was overbought. Look what happened. Trading with the trend, even in a bear market following the technicals, is always a good strategy. Speaking of bear markets, most financial news outlets use the 200-day moving average to indicate a bear market, and here we are with price action below the SMA. The 50-period SMA is also on this chart, and when they cross to the downside, we call this a death cross, and it's as bad as it sounds. We have the same situation on the S&P500 and on the Dow Jones Industrial Average. You will also note that we had a golden cross last July, and the 50-period moving average acted faithfully as a dynamic line of support for months. This changed on March the 1st, and we can see how the stochastic oscillator is showing us bearish confluence. While we are at it, let's take a look at the American small cap index, the Russell 2000. Not as bearish as the big boys, but we can see in a bull market just how faithful the stochastic oscillator is when trading long. Last time we spotted a descending triangle on silver, and price action broke below $81, reversing with this doji candle of 65.50, and now we see price action at the upper trend line and the stochastic oscillator overbought. That's all for now. CFDs and FX are leverage products, and your capital may be at risk.